What is going on, investors? Hopefully you guys are having a great day out there. That is right. It is Friday, and it is the return of the FAANG Stock, a recap show where every Friday we recap all the major FAANG stocks plus Microsoft and Tesla, and we recap all the news, and then we jump over to the stock charts with these ones as well. And it is a critical week upcoming for the major FAANG stocks, as several of them will report earnings next week and the following week. Before we get into the news, I want to apologize. No show last week. I went on vacation. I took my MacBook, fully expecting to be able to upload a show, but I think my MacBook wanted to be on vacation too. It just was not cooperating. Hopefully that will not happen again. Now, heading into next week, we've got earnings from Netflix 4 days from now on 7/20, Tesla a day later on 7/21, and Microsoft following up the same day, 7/21. You better believe for all these stocks and more over the next few weeks, we will be recapping them all here on the channel. So if you have not hit that subscribe button or that like button on this video, I would surely appreciate that. Now, Apple is reporting 8 days from now, so the following week on 7/27. Facebook follows that on 7/28. And finally, to wrap up the FAANG stock earnings season, will be 7/29, 13 days from now, Amazon and Google. Now, let's kick things off like we always do with Facebook. Start of the week at $350. Is this right? Start of the week at $350. Now we're down to $341 with Facebook. So a nice $9 off the share price over at Facebook. You might be asking yourself, this stock has been in a monster uptrend. Is the uptrend broken after this week's poor performance? When we get over the stock chart, we'll talk about that. Now, I've got to mix a little bit of last week's news and a little bit of this week's news with the emphasis on this week because, look, the news cycles go so fast, it's already old news. But I did want to touch on a couple of things. President Joe Biden signed an antitrust executive order to rein in big tech. Shortly after he did that, the FTC commissioner, one of 5 FTC commissioners, this one backed by former President Trump, says, quote, I don't think we have the authority to essentially rein in big tech. And that's what these executive orders are. Essentially, the president directing something like the FTC to actually do something. But usually, or sometimes, those groups say, well, look, it's Congress. It's the House of Representatives. It's the Senate's job to write the laws. But as we know, these senators, what do they want? They want money, votes, and power, okay? And boy, big tech can give you a lot of power, they can give you a lot of money, and they can direct a lot of votes your way as well. So I would not be expecting, I would not be on the edge of my seat looking for Congress to rein in big tech. And I don't think the FTC is going to pass or do anything really significant. Again, that's just my commentary. We'll see what happens there. Now, Facebook is going to pour $1 billion, that's with a B, into a new content creation program. Essentially, it's a little bit like the Google model, or at least the YouTube model, where you publish videos here on YouTube and YouTube will share a certain percentage of it with you, the creator, the video maker, depending on the performance of the ads and those types of things. This will include, in terms of Facebook, will include bonus payments for content creators. So this is interesting. I like this move from Facebook, okay? It shows two things. Number one, Facebook's platform is extraordinarily mature, especially Facebook.com, the app. Instagram, to a certain degree, a little bit less, but it's definitely becoming a more mature product. How are you going to maintain that leadership position? How are you going to continue to get fresh content? I think you got to pay people. And you got to pay people like they do here on YouTube. So we'll see what happens there. Now, Facebook reportedly we did this, I think, with Google or Amazon. One of those companies did the same thing. They reportedly want FTC chair Lina Khan to recuse herself in an antitrust case. So just in case Facebook has an antitrust case, they might even have one going on. But Joe Biden nominated to the FTC Lina Khan. I believe I'm pronouncing that right. My apologies if I'm not. But she's basically been very critical of everyone in big tech. And Amazon, I think, requested a week or so ago that she recuse herself. So we'll see what happens. This is the problem with Washington. It's so hyper partisan that even these nominees are coming in with these biases. And I just wish Washington wasn't that way. But, you know, I wish I had $10 billion. I don't think either ones are going to happen anytime soon. Now, Facebook tests Twitter-like threads for new posts. So basically, like when you tweet, you can tweet like 2 or 3 tweets at a time. This used to have a little photo, or I was on a different site that had a photo. You're going to be able to do the same thing with Facebook. So maybe a thread of post. They're going to test that out with some major accounts over at Facebook. Now, the G20 moves forward on a global minimum tax. So essentially, instead of paying tax where your headquarters, so in a lot of these cases out here in California, but somewhere in the United States for a lot of companies, now you're going to have to, or allegedly, or maybe these companies will have to pay taxes on where they sell their services. So maybe in Germany or Europe, in the Middle East, or whatever it might be. Anyone in this G20. Now, the only problem, I don't want to sound off on this. I think you guys can understand my takes on this, but taxes are a way for countries to be competitive. Country can come in there and undercut the corporate tax rate and attract business. If everybody has the same rate, that just ends a lot of competition, in my opinion. I think competition is very good for business. Now, here, I'm not an expert on Washington, D.C., but it does believe that this deal would need to go to Congress. It would need GOP support. And a lot of people in the GOP would likely not get a lot of support from their voters if they vote for something like this. So we'll see if this is dead on arrival or if this will move on. Speaking of dead on arrival, Trump says he'll sue Facebook's Zuckerberg and Twitter's Dorsey and YouTube. I think Sundar Pichai of Google is being sued. Now, this was last week, and look, I don't think this is going to go anywhere. I think this was all, for the most part, just kind of, it's like Joe Biden's executive order. It's all for show. I don't understand law well enough to understand how Donald Trump is allegedly suing personally Mark Zuckerberg and Jack Dorsey. So I don't understand how that happens when they are simply the CEOs of these companies. I don't think this is going to go anywhere, but it probably looks good in a press release to one side or the other. Now, moving on to Apple, start of the week. This one went the opposite direction. Started at 144, ticked up to 146. So you better believe that uptrend with Apple is still intact as they move into earnings. Now, Apple has slipped in smartphone shipments as China's Xiaomi, or I think that's how you say that, surges. So they grew their market share by 83%. That's tremendous. Samsung rose by 15%. This is in terms of their global market share, while Apple only grew by about 1%. So Apple could have an iPhone problem at some point. It could be that their phones are just too expensive for some of the international market, or they'll have to do something maybe to generate some more interest in their phones. Now, Apple's share price rises again after JP Morgan lifted their price target from a 170 to 175, and considering we're sitting at about 146, that is about $30 more than where the share price is now. Analysts are, this is the interesting thing, we're a week away, or 8 days essentially, I think, from earnings from Apple, and the analysts are starting to line up to raise their price target. So something makes me believe that we could be in for very, very strong earnings over at Apple, because these analysts have their finger on the pulse very much. And if they're coming in here and upping the price target a week before earnings, they might know something that we don't know yet. Now, Citi assigned a price target of $170. Again, that's about $25 more than where the stock price is today. Amazon started the week at 2,000. That would have been a heck of a run. I would be, Amazon's like my number one holding. I'd be jumping up and down right now. I might be at the beach. Amazon started the week at $3,733. So $3,733. And we ended up about $200 down to $3,573 on Amazon. You might ask yourself, just like Facebook, is the uptrend that Amazon was in, is it broken? So we'll talk about that here in a second. Now, Amazon third-party shipping presents a $15 billion opportunity, says BOA. So I want you to follow me on this one. So last week, or it was actually 2 weeks ago, Big Commerce, which we've covered here on the show, it's a little bit like Shopify. It's basically a version of Shopify, or a service similar to Shopify that helps e-commerce sellers sell on their own website. Well, they partnered with Amazon. I thought this was really interesting. So if you have a Big Commerce store, you're going to be able to do order fulfillment with Amazon without having to have an Amazon account. So think about that. You got your own website, you sell whatever, you sell labels, okay? And you don't really want to sell it on Amazon, or you sell some on Amazon or whatever it is, but you sell these labels on your big commerce shop, but you don't want to sit here and box these up, pack and ship them. Well, you send them into Amazon, and then when you get an order through your big commerce website, Amazon packs, and ships them. I think this is a fantastic idea. I think it's a great opportunity for Amazon. I think shipping and fulfillment, it's going to be exactly like AWS. Okay. AWS was started because Amazon.com would crash every Black Friday, every Cyber Monday. So what did Amazon have to do? They had to build up a ton of server space just so their website would not crash for like 2 days. Then what did they decide to do? Lease out that server space to other websites, other stores, other everything, Netflix, all these types of places use AWS, and it started a big cloud computing boom here and around the world. And Amazon's going to do the same thing with their fulfillment. They're building out all these fulfillment centers to help Amazon.com. Eventually, it's going to help every .com owner out there. Now, moving on to Netflix, started the week at $538, and the week basically flat. Ended the week $530. We'll talk about Netflix from a technical perspective. It does look kind of interesting. Now, Netflix, we talked about this and we'll probably talk about it here in 4 days when we talk about Netflix earnings. Their subs are troughing, as this says, but basically starting to flatten out. And that is because during the pandemic or the virus, everybody was at home, and everybody, at least here in North America, globally it's slightly different story, but here in North America particularly, if you have a Netflix subscription, you have one. If you don't have one, the odds of you getting one are probably pretty low, okay, at least for a long period of time. So we've always talked about it here on the show. What is Netflix's next move? Their next move, it appears to be going into a video game. So they're going to be offering potentially these video games where you're going to be able to stream video games for no additional charge. At least that is the report out of Netflix. Now, moving on to Google, start of the week at 2,514. There's got to be a broken record in here. This show, I'm going to get flagged by YouTube for content, like repeating content, because all we do say every single week, Google's up, Google's up, Google up. When we get to the stock chart of Google, you will see that this thing continues to go up. Now, Google was slapped with a $593 million fine, which is like, 25 cents to them, basically, by French antitrust regulator. But this is interesting. So the regulator said Google had violated its 2020. So Google didn't even last a year on this one. That they must, and this is Google, negotiate with publishers for the right to show snippets of their content in its search results. So for Google to take a snippet of an Australian, or in this case, a French news outlet, to put a snippet of it in their Google search results, they must actually kind of negotiate and maybe even pay some of their publishers. Google says that they were negotiating, but the French regulator said, no, you're going to be fined $593 million. My guess is Google's not going to write a check for this amount right away. They'll negotiate that, and we'll see what happens there. Moving on to Microsoft, started the week at $278, and you guessed it, this one was up to $280 as we slide into earnings week with Microsoft. They are set to buy cybersecurity firm Risk IQ. This was for more than $500 million. They currently have clients Facebook, BMW, American Express, and the Postal Service. It's a good list of clients. So you do this deal like Microsoft, $500 million is nothing to Microsoft, okay? But what it does is now it gets some clients in the door that might use some of your other services. It also, with Risk IQ now being a Microsoft product, Microsoft can go out to its existing clients and say, hey, we've got this new product, this Risk IQ product, and develop more services and money off of something like that. Amazon, IBM, and Google respond to Pentagon's revised cloud contract. This was 2 weeks ago. So this $10 billion deal that I think originated under former President Trump, it got awarded to Microsoft, and Amazon claimed foul play. because they thought that and they might be right, I don't know, but they thought that maybe it went to Microsoft because of the former President Trump's disdain for the Washington Post, which is owned by Jeff Bezos of Amazon. I don't know if any of that's true. My guess is it probably is, but what the Pentagon decided to do was pull that contract back. Now they're going to work, it looks like a mix, maybe IBM, Google, Oracle, Microsoft, Amazon. Looks like they're all going to get a piece of this deal. And quite frankly, that's probably how it should be anyways. Moving on to Tesla, start of the week at 671. Boom, way down. Okay, 644 on this one. This one slid like Facebook and a couple other of these stocks. So you'll be wondering when we get over the stock chart, what is Tesla's trend looking like? We'll talk about that here in a second. Now, flying cars from Tesla called a likely long-term scenario from Morgan Stanley. I tell you what, they've been talking about flying cars since I was a little kid. I think we're going to have flying cars. You know, I'll be long gone by the time we have flying cars. But some of the other things in here is Morgan Stanley keeps its price target of $900 on Tesla, and considering we're sitting at $644, $900 is quite a bit of upside. Now, just like Apple, analysts are kind of lining up behind Tesla as they move into earnings next week. And so we'll see what happens. So it lands a higher estimates from Goldman Sachs. They're noting that because they had some price increases recently, we'll talk about that here in a second, that Tesla's price target is now $860 at Goldman Sachs. That is roughly $220 more than where the stock is trending now. This week, Elon Musk was in trial over a $2.6 billion solar city purchase. So several years ago, Elon Musk owned a minority, I think a small stake in Solar City. I think he owned about 21% of it, and Tesla decided to buy it. And he kind of claimed that this was the whole vertical integration of solar powering your Tesla, and not a lot of people bought it. Okay, not Wall Street didn't buy it. A lot of shareholders didn't buy it. It doesn't look, when we go over the financials of Tesla in the past, and I'm sure in the coming days when they report earnings next week, it didn't make a lot of sense financially. So there are, shareholders claiming this was kind of a bailout of Mr. Musk's Solar City, and it basically gave him kind of a windfall since he essentially used Tesla to buy another company he owns. We'll see the outcome of this. Not much. I don't think there's going to be a lot coming out of that, but it will likely make Mr. Musk a little more hesitant to do those types of deals in the future, I guess. Tesla raises its Model S and Model X prices by $5,000 in the US. We see this. It goes up and down, and I actually like that with Tesla. Probably other car makers are doing this too. Okay, they just don't get the press that Tesla does, but we constantly see prices going up and down over at Tesla. Now, speaking of going up and down, these stocks have been going up, but we saw that they came down this week. Let's kick things off from a technical perspective. With Facebook, we've been in this monster uptrend, and depending on where you put this trend line in, okay, you can put it in here, you can put it in here, I don't know, wherever you want to put it, we have come back and at very least retested this trend line, if not broken it, okay? Because you do see here, I'm going to zoom in just a little bit on where we're at here. So from a technical perspective, you're looking just real simply, and I tend to keep things really simple. You've got a low here, higher lows here, higher low, although it almost broke that, higher low, higher low. So this uptrend is still intact, but in the shorter term, notice we have a low here, a lower low, and a lower low. Some technical people might say that is a reversal, or at the very least, we're kind of consolidating out, flagging out, waiting for our next move. And look, it makes sense, okay? We've got earnings for Facebook coming up in 12 days. This stock's been on a heater, and so it wouldn't surprise anybody to take a little bit of a breath here. And even if it breaks trend a little bit technically, we'll see what happens on earnings. You get any pullback, and I'm going to wait I wouldn't buy any of these stocks before earnings, okay? I would just wait, because these stocks, a lot of them had these monster moves. If earnings come in line or disappoint for whatever reason, maybe guidance, maybe something said on a conference call, something disappoints Wall Street, well, these things can, give a lot back. And so we're really looking for Facebook in the shorter term back to 330, but in a more reasonable sense, I think coming all the way back to 300 would create a nice buying opportunity for Facebook. Moving on to Apple. This one is not broken trend. This one is in an uptrend and is wanting to continue to go higher, although it looks like it wants to stall out a little bit, where we had all-time highs back here in January at about $145 per share. That's about where the stock is right now. It is just hanging out. Again, with Apple, we're waiting about 8 days. Wouldn't surprise me if this one just kind of wants to hang out here. Personally, I wouldn't want to be in this stock. A lot of veteran traders probably wouldn't want to be in this stock. You're playing with fire. When you roll into earnings, we'll see what happens with Apple. Moving on to Amazon. Now, this one it had a much steeper give back. Okay, so you did have an uptrend with this one somewhere, and it definitely broke down. Okay, this is absolutely, you have a low here and a much lower low. This one, to me, looks like it wants to come all the way back down here to 3,500, which was kind of our previous breakout point. So we painted this big green candle, created this small little gap. Wouldn't surprise me if Amazon comes all the way down to the $35, give or take, 3,500, give or take $50 or so. Okay, it looks like it wants to come back into this range. If you hold this level with Amazon, I wouldn't say incredibly bullish, but it is bullish, because you hold this level, then that uptrend can resume higher. We'll see what happens after earnings with them. Netflix definitely broke trend. Okay, Netflix was on a nice steady uptrend, but we definitely made some red candles, and we got rejected right where we thought we would get. Okay, so I draw these lines in. I move them maybe a little bit. Okay, occasionally you might move one in and out depending on some stuff, but this upper trend line's been in for a while. That's at $560 with Netflix. That's where we've gotten rejected numerous times. I mean, this goes back to July, like for a year now. We've been getting rejected right at this 560 level. Okay, give or take 10, $20 on this one, but we've been consistently getting rejected here. Wouldn't necessarily want to jump in on this spot. This is one of those weird technical cases, and not a lot of like newer investors understand this. Okay, I would rather buy Netflix at 562, 563, somewhere above this line, than where it's at right now. I know that doesn't make a lot of sense, but the longer you've been in the markets, the longer you've kind of looked at these charts, I wouldn't touch Netflix at 530, but I'd very strongly consider buying it. Not necessarily at 560. I'd want to be up above these highs. So I'd want to be up above here at 590, 560. Believe it or not, I'd rather buy it at a higher price than at this lower price. Now, if we get rejected here, there are some intermediate lines. I don't necessarily want to clog this chart up with a ton of lines, but basically every $10 down, in my opinion, can be a buying opportunity for Netflix. And if you come all the way back down here to this 480, 490 range, for some reason, maybe after earnings, that could be a buying opportunity. You break this 480, 490, and you are coming. There's some, really dry areas underneath Netflix. So we'll see what happens heading into earnings with them next week. Don't gotta spend a lot of time on Google, guys. This thing is on a rocket ship and it is moving forward. It's like on autopilot. Okay, they have like a Tesla rocket ship over at Google right now, and it's their stock chart, and it is on autopilot. This thing just keeps going up, and this trend is intact until it is not. Okay, and listen, when this trend is going to break at some point, when it breaks, it doesn't signal a buying opportunity. Okay, this thing breaks trend, breaks this lower trend line, wherever you want to draw it. That doesn't signal a buying opportunity. You want to wait, see what happens. It could be that it just, wipes out this whole trend. It could be just a tiny sideways consolidation, and then we make a reversal. You wait for those type of confirmations. Just 1-2 days after a break on this trend, I would not be jumping in to Google, but I'm glad that I own some shares because those things have been on a monster run. Speaking of monster runs, Microsoft just on an elevator shaft, looks similar to Apple, but probably even better. This chart looks really good to me. This uptrend is intact, and it is intact just like Google. We just saw with Google. This uptrend is intact until it's broken, and we get confirmation that it is broken. And we'll see what happens with Microsoft, see if after earnings it can hold that trend. Now, Tesla, Little bit different story. Okay, we were wedging out here. I remember a couple shows ago, we were kind of wedging out here and we talked about we were either going to break below 550 or we were going to break above it, and it was going to bring these price action in play. Now it broke above it, but we've kind of been hesitating a little bit, but I still see this. Okay, I had to just address our trend line just a little bit. I still see this trend line. I'm going to take this lower trend line out. That's basically been broken off. I am now seeing that we're still in this uptrend, and now we're actually creating a new little wedge here. Okay, so we're kind of creating a little wedge here, and we're headed, guess what, right into earnings. We're going to be right here. So heading into earnings with Tesla, you're looking for a break above, we'll call it $700 per share. You break above $700 per share, 750. It's not guaranteed, but it's highly probable. You get above 750 on this one, 800, 850, and I think it's like Goldman Sachs or Morgan Stanley's price target of $900 is absolutely 100% in play. Now, if this trend breaks, we break down from here. We're looking for a break probably below 620, which is only about $20 lower than where Tesla trades. You break below that on Tesla, you're absolutely bringing in 550 into play. 550, if you want to, can be an excellent buying opportunity, but there's not a lot underneath 550. If this swing gets some momentum on the way down, you're coming between 4 and 450 on this one. That, in my opinion, and I've been waiting for a while on this one, 4 to 450 would be a very excellent buying opportunity for Tesla, but the knives are going to be out. Tesla down here at 400. Every story on CNBC, every story on Seeking Alpha is going to be Tesla's lost its mojo. Tesla's negative. It's going, that is when you want to buy. Okay, I don't necessarily want to buy up here when price targets are going up. Everybody says flying cars, this, that, and the other. I want to buy it when the news is really super negative, and I think it would get that way if you shaved about $200 off this share price, maybe even $250 off this share price. Things would be very negative. That is when I would want to take my shot at a stock like this. Guys, hopefully you guys had a great week. Sorry about last week. We'll be back again soon. Help me get to 100,000 subscribers. If you have not subscribed, please consider doing that now. And if you have a friend or a family member that you think might like the show, maybe consider sharing that with them. We've got tons of videos over the next couple of weeks. Can't wait to share them all with you. Until then, good luck with your investments.